TFNN. Headline News Update. Here's Tom O'Brien.
Welcome, folks. We have the Dow Industrials down 133. You get the NASDAQ off 43. S&Ps are down 18. Gold is trading up 260 at 1175. We get silver at 1574. Light sweet crude's off a buck at $58.63 a barrel. Bonds, the 10-year is up 22 ticks, 125.23. 30-year is up 2 full points at 149.16. Both of those moves, folks, with conviction. Wide price spread, accelerated volume. King dollar's up 29 ticks at 95.68. You got the euro down 38 at 111, and the yen is down 96 at 122.88. Bottom line out here, what do you have? If we go across the world, what you're going to see is this. You had the Greek banks closed down. It started off, of course, in Asia, because that's where we start, where we open first. Asia was down from 2.5% all the way to 3.34%. You have China that's down 10% in 2 days. Europe right now, the DAX is off 2%, the CAT's off 2.5%, the FTSE's off 1%. They had been down about 3.5%. Our own markets, this is, folks, this is not even a pullback. We have the Dow off 0.7% right now. The S&P is off 0.5, and the NASDAQ's off 0.8. That's not going to stay. What they managed to do is that they pushed the market higher on the open. They filled a few gaps. Bottom line is that these banks and the contagion of these banks in Europe, no doubt, are going to affect these markets. Right now, with the Dow down 130, I expect what you're going to see here as we come into the trading day later is that this baby's going to be down to 250. The euro is the real wild one. The euro bottom line filled the whole gap from last week. I expect you're going to see that actually also go dramatically lower, not in a huge, not in a small amount. The euro had hit 111 this morning. I suspect it's going to make its way back down to this about the 110 area. The transports, what the transports have been doing for quite a while is this. The transports have been making their way to the October 2014 level. This morning, this is where we stand. We hit 81.80. It's 81.69. So you're 11 points away from that number. And I suspect what we are going to have now is this. You're going to be going into those, the top of the low, high volume swing low, and you're going to be doing that with volume. What that's going to set up is that that's going to set up going into that bar, number one, and we'll see whether that bar holds. We go over to the Treasuries. We take a look at the Treasuries. The Treasuries, even a couple weeks ago, they wanted to move higher. Bottom line is that you're going to see the money move once again out of the equities into the Treasuries. This morning, we've come into the 126.20 swing point, and we've come into that with volume. With that setting up, on the Treasuries. They want to move back up to the 127.34. The 10-year yield right now is out there at 2.3. Gold contract. What do we have with gold? Gold still can't get the traction out here, but the bottom line, they can't slam it down either. Bottom line, gold, we're at up 340. You're 1176. That little baby wants to get into this 1205.70. The market today, what you can expect flat out is wide price spread, accelerated volume, and what you're going to see is that you're going to see these moves come out of, they're going to seem to come out of nowhere. What I expect you're going to see a couple very fast sells on the way down. All of the futures, meaning the S&P futures, the Russell futures, the Dow futures, and the NASDAQ futures, try to fill the gap from this morning. The lows that were established intraday or intranight, you can expect that we're going to be going after those lows. The volume is going to be extreme out here. And what that sets up on a much longer-term basis is lower prices are coming at us. This 10 a.m. update is brought to you every day by Everbank. For more information on the products they offer, visit everbank.com/TFNN. Have a great day. Have a safe day. Look forward to speaking here. Right back here, 10 o'clock tomorrow morning.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative market-safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.